Hey guys, what is going on? Welcome back to the portfolio. As always, hope you guys had a fantastic day of trading today. And again, want to start off the video by saying thank you to all the supporters, all the viewers, all the subscribers out there making this channel what it is. I immensely appreciate your support. If you guys do like the content, if you guys do like the video series, feel free to like, share, and subscribe. And if you are a subscriber, make sure to hit that bell button to get alerts and updates on all new content posted on the channel. For today's video, I'd like to talk about 3 stocks that I'm looking at for next week in a dividend capture swing trading type of strategy. As you guys know from my prior videos, I like to do swing trades with associated dividend captures, and I have 3 stocks that are very good buy and hold stocks that have pretty good dividend yields, and these are exactly the type of stocks I like to do these types of swing trades in, the dividend capture swing trading. They're stocks that you can collect a dividend, and then if the trade doesn't rebound after the ex-dividend date, you can hold for the longer term and have a pretty safe buy and hold stock. Unlike a lot of business development companies like Prospect Capital, PSEC, other closed-end funds, some penny stocks with very high dividend yields, if you can't get out of that trade, it's very risky holding for the longer term. So I try to select stocks that have very good dividend yields or reasonable dividend yields that are also from very safe companies, typically blue chip companies, well-established companies that you can hold for the longer term and wait for the price to rebound to sell off in a swing trade. So you get the dividend, you may need to hold for a few weeks, maybe a few months, but when you do get out of the trade, you get the dividend and you also get a little bit of capital appreciation on a swing trade. So that's the kind of philosophy that I've used to select these stocks. So having said all that, let's jump into the 3 stocks here. The first one here up on screen, as you can see, ticker symbol TUP, Tupperware. If we go to the bottom here, you guys probably know this company by its name brand alone. It's essentially a direct-to-consumer marketer products. A lot of you guys probably know the Tupperware brand, but there's a number of different brands under this company here. You can see the dividend yield is exceptional here, 5.69%. PE ratio is very good. Market cap, not that high, but it's still in the billions there, 3.26 billion. And you can see over the past 1 year here, kind of an up and down pattern here. It's still up 19.93% over the past 1 year, which is phenomenal. At one point up in the 30 to 35% rate of return. Over the last 5 years, kind of a different picture here, up and down. Kind of looks like a pretty good swing trading stock right through this area here. I still think this is a very well-established company, so if you can't get out of a swing trade, I'd be more than happy to hold this for the longer term. It's got an ex-dividend date next week, 12/19, payment date of January 5th, 2018. It's a 68 cents dividend, which comes out to about 4.9 to 5.1% or so, depending on exactly the price of the stock on the ex-dividend date. So a very, very good stock here, a good dividend yield, and a quality company that you could hold for the longer term if you can't get out of that swing trade. So again, ex-dividend date is on the 19th, so you got to buy before the 19th to qualify for the dividend. So you can buy tomorrow or early next week, Monday, and you can get that dividend and then try to sell off in a swing trade. So that's the first stock there, Tupperware. The second 2 stocks here are sin stocks, tobacco stocks. This may turn a few of you guys off to these stocks because they're involved in tobacco products. Again, sin stocks. I've put out a couple videos talking about sin stocks and some of the ways in which they are invested. A lot of investors don't prefer these types of stocks. But nevertheless, these are still meeting the criteria of very good buy and hold stocks, blue chip stocks, well-established companies with very good dividend yields. So the first one here, Philip Morris. If we go to the bottom here, you can see essentially it's a tobacco company. It has some different segments as well, but that's essentially what it does. You can see the dividend yield is very nice there, 4.5%. It's a much larger company than Tupperware, as you can see in the middle there, 168.12 billion. Pretty good PE ratio. The performance over the past 1 year here, as you can see, kind of an up and down pattern. It's kind of like with Tupperware here, 30-35% or so before pulling back. Over the past 5 years as well, 52.29% with a little bit of an up and down pattern here over the last couple of years. Pretty good performance over the past 1 year, to be quite honest here. Dipped down a bit, on the rise. Again, a sin stock. A lot of you guys might not prefer this type of company, but it's still a very well-established company, a safe company for a buy and hold strategy with a great dividend yield around 4% or so, 4.5% with the current price of the stock. So Philip Morris, ex-dividend date is on the 19th. Payment date will be on on January 1st. And the dividend will be $1.07, representing, again, about 4 to 4.5% dividend yield on this particular company. So very good company. Again, a sin stock. So it may turn off a lot of you guys to this stock. I'm kind of in that same category, to be quite honest. Not quite sure I want to invest in this stock, but we'll kind of see how everything turns out tomorrow and early next week. And the last stock here, again, if we go to the bottom here, you can see this is a company engages in the production market of tobacco products. Again, like Philip Morris, it's a very large company, $138.10 billion. It's got a good dividend yield, anywhere from 3.5 to 3.9% or so, again, depending on the price of the company. Over the past 1 year, like Philip Morris, kind of an up and down pattern. A little bit more volatile with this particular company. Definitely has been down a bit over the last few months here. For the last 5 years, excellent performance, 167.81. And just like Philip Morris, it had pulled back here over the last few months. It is now rebounding again. The ex-dividend date on this company is also on the 19th of December. Payment date will be on the 10th of January. And the payment is 66 cents, again, representing about 3 to 3.6% dividend yield or so. Again, depends on the price of the company, but a very respectable dividend yield on this company. So again, ticker symbol MO, Altria, ticker symbol PM, Philip Morris, and ticker symbol TUP, Tupperware. 3 companies that are very good buy and hold stocks that have ex-dividend dates coming up next week. You can jump in, grab the dividend, and then try to sell off in a swing trade. So you get a nice swing trade as well as that extra dividend that you captured by buying before the ex-dividend date and then selling off on or after the ex-dividend date. So again, these are 3 stocks I'm looking at in the portfolio. I'm planning on jumping in on a dividend capture swing trade. Also, you can also do swing trading with dividend capture by buying before the ex-dividend date, a few days, maybe even a few weeks, and watching the price kind of trend up as folks are trying to jump in for dividend captures. And then if that trend up is more than the dividend, you simply sell off and you've made that capital appreciation dividend capture, if you will. So you don't always necessarily need to capture the dividend. If you also buy before the ex-dividend date and then watch it kind of trend up and sell off, that's also a very good strategy of buying a dividend capture type of stock. So that's what I'm looking at the portfolio. Let me know if you guys like those picks or you have better picks for next week. Those are the 3 stocks that, again, I selected by well-established companies, buy and hold stocks that have dividend yields coming up next week that you can get in and out of a nice swing trade and not worry about holding for the longer term. If you need to hold it for a few months, no problem. Unlike the other stocks, like I said, business development companies, even some real estate investment trusts, closed-end funds, penny stocks with high dividend yields, this is a much easier and much safer way to do the dividend capture swing trading. So not to make the video too long, I'll kind of end it there. Again, let me know if you guys like these picks or you have better picks for next week for dividend capture investors. So yeah, I'll kind of end the video here. As always, if you guys enjoy my videos, feel free to like, share, and subscribe. And until the next video, we'll see you then.